Okay, here we are in our next segment of our live Forex trade. And of course, yep, you guessed it, we're going to go to the date and time. How else can we verify that this is the day and time that we say it is, right? So here we go. Okay, Thursday, February 28th, 2013, 6:11 p.m. Eastern Standard Time. Okay, so here we go. We're going to go into our chart and find out where we stand from the trade we took several days ago. Okay, here we are. Now we were short, and we still are, from right here. Okay. Alrighty. As you can see, the close to the opening price right here. We're short from there, and we were still in this area. The market went up, came back down. That's basically a non-directional day, went both ways, and this was sitting in the center there. And then we had an open that was about at the same level. We traveled up and we made a new high. We had a higher high and a higher low here, which made us feel like, well, potentially we'll be moving up. An uptrend consists of either series of higher highs or higher lows or both. So we go into the action here, and we didn't make much headway in this direction, which is fine because our stop loss is right up here, up at this particular level. Okay. All right. And we're currently, this day has been a down day, and this particular session here we really haven't gone anywhere. But again, we've stalled, and we can say it can be pretty much either direction from here. Although we've moved down, and as you can see from this particular level in here, we're right back near that 1.3 level that seemed to be, well, let's just say it can be considered as a support level for what we've seen here. But even for a short time, we went down, bounced back up, and that was that. So we're entering that area again. And as you can see down here, there's back and forth movement, and there are two common names for the market kind of back and forthing it. Did I just make up a word? I probably did. That's sideways. It's also called consolidation, and there's a third one. Sorry about that. Congestion. Okay, so I have congestion here, some congestion here, and we'll just we'll see where we come out of here as far as the trade's concerned. Now, some people may be looking at this and saying, well, there's an opportunity to to move our stop down here, but there's certainly, I don't think, well, you can see there's not an opportunity really to move our stop to break even. So we're going to leave it. We're going to leave the stop up here, and that's going to be that until we'll look for some additional downside action. Now, I'd say if we would go down another 100 points or so, we start to get down below this area, then perhaps we can move our stop here. But think of it logically this way. Yes, it's no fun to get stopped out. Yes, that's not a small stop. That's over a 200 pip stop for sure. But as we're looking at it, if you think about bringing the stop down, basically within, oh gosh, within roughly 100 pips of where we were, that's like the daily range. So it's easy for the market to move up and take out a stop right here, and then you'd be out of that 100 pips. It's best to have a stop that has enough room to contain the price movement, but that is also not so large that if it does get hit, it would be catastrophic. You don't ever want that. Okay. So anyway, here we are, and we're at this price level right near basically where we got short. Something else to consider, that we didn't move down very far, so the trade itself hasn't made very much progress. Okay, so there's another type of trailing stop that people will use, and it's a kind of what they call a stale market or stale profit, kind of a trailing stop, and they kind of ratchet it in closer and closer the more the market doesn't go anywhere, because they're looking at it as, well, very non-directional, so it can go either way. But anyway, that's just another, that's another type of stop. So some people might ratchet it down 50 on the first day, 50 on the second day, 50 on the third day, another 50, on the fourth day, and so forth and so on. So anyway, just a little bit about a stale market stop. Not sure if everyone's heard of that, but that is a risk control measure that is used by some. It's not one you hear a lot about, but it's sort of when the market does get stale, and that might be an opportunity to take advantage of the type of trailing stop that is triggered based upon time rather than price level. Okay, so in other words, it's moving down as the days go on, rather than necessarily the price level. Okay, all right, well, that's it for this segment, and we'll see you in our very next segment. Thank you.